Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend, Matt, the lumberjack landlord. How you doing?
I'm doing awesome. Series one was fun. That was good.
Yeah, that was fun. Showing him some real math, ninth grade dropout math. I can
It's,
appreciate that.
but it worked.
It worked. Yeah, it was powerful, man. It was powerful. What I want to talk about here, you and I kind of share the same experience, right? Tech background, commission sales, real estate, burning the stock market, all that stuff.
Mhm.
Also, we've experienced two pretty nasty markets, right? The dot-com crash and the Great Recession.
Sure.
And, there's a lot of people out there, who haven't, we've been basically 15 years since a lot of pain, right? We've kind of tried to make recessions disappear, and that's not how it works, right? The business cycle needs a recession to clear the underbrush.
Mhm.
And we've been warning people this was coming. We've been saying pain is coming. We said winter is coming. We've done all these things to prepare people. Now the national media is catching up. Now the billionaires are catching up, right? Jamie Dimon came out yesterday and basically said, it's scary coming, 20% drop from here, all of these things. What I
Mhm.
wanted, what I want you and I to tell people is this is not going to be March of 2020.
Mhm.
March of 2020 shut the economy down, unemployment spikes, GDP crashes, and there's this V-shaped bottom. That's not normal.
Mhm.
And the process is going to be far more painful, far more drawn out. I call it kind of death by 1,000 cuts.
Mhm.
It's going to take quarters and maybe years to kind of play out. This is not going to be in a 1 day, 1 week, 1 month collapse and we go up. At least that's not what I think.
Agreed.
It's the bottoming's a process and it just
Yeah.
takes time.
Yeah. It's death by 1,000 cuts is an accurate characterization of what we're going to experience. It's going to be bear markets are very volatile. They go down and then you see a pop one day on some piece of good news because everybody thinks that that's a kernel of truth that's going to help pull us out of this. And so you see massive volatility, 400, 500, 600 point swings. You see that in a bear market. A bear market just doesn't mean down. So I think what a lot of people are going to need to get, used to is we are back to the 401k water cooler lament.
Yes, the two
It's
the 201k. Yes.
Oh, sweet heavens. The number of people I've had to listen to that conversation to about, the last month has been a nightmare. Oh man, because most of my friends know that I don't really invest. And so they're just like, man, I'm getting crushed. I was like, really? Yeah. My real estate rents are way down. They're like, really? No, not really. They're like, you're a dick. True.
Yeah,
True.
yeah, yeah. Yeah. Sorry.
Check. So yeah, I mean, but that's the conversation that they're having is, oh my word, I'm getting obliterated. I'm getting crushed. It's an absolute nightmare. There's no safe haven. I was like, if only you knew of somebody that was really kind of recession proof and how they've managed through so many different financial struggles. Anyway, so I think the real key for us is, yeah, it's going to be painful. It's going to be a gross ride down. And this is where I've said the mindset has really changed. Now everybody's super negative Nancy. Now everybody's mad. Everybody's angry. Everybody's mad. And PS, by the way, start watching those ridiculous IRRs come crashing to the ground and go through the floor in those big syndications that everyone was, well, just getting, I get 11% returns. You do right now. You do
Yeah.
right now. You're not gonna.
Yeah. And pain's coming.
It's good.
And
It's gonna get so much worse.
yeah, I agree. I stand by my statement that 2023, and it doesn't feel good saying this.
No.
2023 could be the worst economic year of my adult life. And that's
Mhm.
after that's worse than the Great Recession, worse than the dot-com crash. Because I think what's coming is kind of a blend of both of those.
Yeah.
Right. So I believe, again, people can go back on my channel, right? I talked about, hey, you know what? I might buy stocks if the S&P 500 hits 3,200.
Mhm.
You know what? Might happen. If it goes to 2,900, I might like put some real money to work.
Right.
Real estate won't be immune. I'm not confused, but it's going to be real estate will be impacted differently because I'm
Yeah.
not calling for a housing crash in prices. You think we might see 10 to 20% nationally by December 31st of 24. We have a $1 bet on it. I'll get a shadow box right there. It'll go next to Dion's.
I wouldn't order it yet.
Yeah, no, it's a long way away. No, it's fair. I'm not calling for that. And I love the fact that we disagree.
Yeah.
I think, again, I think people are underappreciating the distortion because transactions will crash 50%. And I bring this up because I'm doing a weekly call with my team at the hub in Fresno. And just in the last 3 weeks, we ran into 2 divorces and 1 military transfer.
Okay.
Of folks who bought, roughly speaking, in the last year, a new home.
Okay.
And, their mortgage rates in each case is 2 are under 3. 1 is just over 3%. Fixed 30 years. Rates we can't sniff today.
Right.
And their payments are in a way that we can actually make, they actually could become cash flow rentals, right? There's going to be more and more of those opportunities.
Absolutely.
But when that transaction happens, it's not a normal sale. It's not distressed. It's, it's sub 2 or an ovation. If it's a VA loan, they're assumable.
Right.
Right. So I think there's going to be, I think there will be distress, but given the rates, it's not going to be distress like 06, 08, where values fell and, they'll just be handled differently.
Yeah.
Then we're going to see distortions in the market. If you saw my conversation with Brian Lebo, there was a moment in the video where I think I turned the light bulb on for him, where we're talking about this community in Vegas going down 20% and transacting again. But I'm like, Brian, that's exactly what I think's coming. But even if they go from 700 to 550 and they start transacting, that's still above the median. So that could still reverse Vegas's drop. And he's like, oh, yeah, could.
Yep. Sure.
Because again, what has happened in Vegas the last 3 months? Prices have been declining. Yes. But the rate of decline is greatly slower.
Oh, for sure.
And I suspect before this year is out, it'll bounce up and people will blow their freaking mind. How could that be?
Yeah.
Inventory mix is going to shock people. When you take the number of transactions from 7 million to sub 4, you're going to get funky behavior in the numbers.
You are. Yeah.
And
Very
that's
uneven.
what I see coming.
Very uneven, not predictable. The other thing too is in my Vegas search, price, the median home price, I think, is now down over 10%. However, I thought that we would blast through. I think we hit about inventory of a little over 8,000,
8,200.
8,200. Yeah. I thought we would blast through 8. I thought, oh my gosh, here it all comes. And then it hit 8 and it stayed at 8. It stayed at about
exactly
8.
what I thought was coming.
Yeah.
You get all these foam. Again, go back on my channel, July 15th. I say July 15th, watershed moment, National Association of Realtors about June. We're going to get all of these would-be sellers with wish pricing list. You get some more. Now you're getting cancellations. You're getting expireds. You're getting all these things in inventory. I actually told Brian, I said, dude, I think inventory is going to fall in Vegas by the end of the year. He's like, maybe. I'm like,
I think it will. I think inventory by the end of the year will fall. I think that it's already started to fall. I think that we actually see probably a reverse trend even before the end of the year. But I think the thing that is most interesting of all those different data points is look at the number of homes that were listed that were then pulled off the market because they weren't getting the number they wanted. It's typically right now, it's 400% higher than it usually is.
Yeah, and when I talk about cancellations, I'm not talking about purchase cancellation. I'm talking about a listing cancellation. That is somebody saying, "Hey, honey, we missed the top. Let's try to get it. We didn't get it. We're staying put."
Yep.
Oh, by the way, honey, we can't move because we got a payment that's lower than this and that. We're staying put. The Fed broke housing, and this is why I think you'll see a shock in Vegas, and Brian's going to be like lose his mind when Vegas goes up next month. Because again, I think in October, you're going to see record low transactions in Vegas and the median price will be up 1 or 2%. He's going to lose his mind.
Yeah.
We'll see. We'll see in about 30 days. I
think all those things are possible. I think the biggest difference that we've seen is I think now it's what we would call a plus minus number as opposed to an appreciable number. You're not going to see down 10, down 20, up 10, up 20. You're going to
totally agree.
Plus or minus couple points. I think a level of stability in that market. That's what I see happening. And again,
Yeah, and if Vegas is flat
yeah,
and Vegas moves first, what does that mean for everybody else? Hence the ship's flat for 5 years.
yeah. I mean, I think that, in the 70s, if you put your money in 1970 and you got out in 1980, you were dead. You were flat even. You were basically, you didn't make any money, and then if you bought a house, it doubled.
Oh, dude, doubled cash flow. You got the low interest rate. I
Yep.
love the fact that we did that. Hey, the
Yeah.
winners are going to be I have a shirt right there. It says, I use inflation to get rich. Ask me how. That is because of the 50-year spreadsheet. And I'm like, dude, the people that won the 70s bought a home in the 70s.
Well,
Same
yeah,
answer in the 20s.
In the early 70s, you were getting 7% debt. And then by the time it was the early 80s, you were at 14% debt.
And
14
housing double. And housing double.
And exactly. And housing doubled. So the other thing too is that I hear a lot is it's unaffordable. It's unaffordable. It's unaffordable to you. I don't need 100 people that can afford my rental. I need one, just one. And so when we did that video on the rental apocalypse, it was scenarioing out exactly what something could look like to get some sort of a decline. But that decline wasn't a true decline. It wasn't I'm making less than I am last year on my rents. It was, I'm not seeing a 20% uplift. I'm not seeing a 10% uplift. That is what absolutely blows my mind is people sit there and think that all these landlords are going to go bust. The only ones that are going to go bust are the ones that are heavily over-levered, the ones that built into their calculations a 5 to 10% rate hike every year because it happened the last two. And they're like, well, it actually went up 20. So I'm being conservative at 5 to 10. No. You don't count for rental appreciation. You don't do that. It has to work with the numbers that you have right then and there. And then if you do that, then that's a conservatively good or great deal. That's where I think people are going to miss this a lot, and again, it's when we are getting people, when people are leaving our units, and we just had one leave, it was $1,900 a month. We did a very small update, basically just paint and clean. And we went from 19 to 23.95.
Good for you. Yeah.
I mean, people that are staying in their units and their landlord goes up a little bit in rent, like I see them all of a sudden going up took the place of, well, it wasn't 20%. Like they're literally celebrating the fact that we'll see in Zillow, the rent went up to 2,400. Now the guy actually took 2,100. Hey, dummy. What was it last year? It was 1,900. It's still effectively almost a 10% increase. He just didn't get a 30% increase. Like intellectual honesty. This is where it's important because that's what shows the actual numbers and how it's really affecting people.
Yeah. At the end of the day, what I really want people to realize is what we're about to go through is going to suck for lots of people. It will create opportunity for others, right? Because opportunity lives behind pain. Great opportunity lives behind great pain. But it's not an event. I'm afraid that a lot of people are looking for this tectonic, almost earthquake-like event, where in reality, it's not an earthquake, which just, it's over in 8 seconds, or you hope it's over in 8 seconds. It's more like winter, where it's months, right? It's weeks and months and months. And this is going to be a long ass winter.
Yeah.
So don't rush, do the homework, get around positive people. You don't need to be around negative people. Video number 3, I've just created the topic. We will get to that next. But before we do, where can they find you?
Lumberjack Landlord on Instagram and YouTube, as well as live streaming Sunday at 11:30 a.m. Eastern time.
Awesome. Thanks, buddy.
Thanks, Mike.